Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm a KKM Financial. Well, another quiet day for the SPX, pretty much unchanged for a second day in a row. And with that, we're seeing the VIX pushing back down towards the low end of the range for December and really low end of the range for the year. 16.62 was the intraday low yesterday. We're off that. 17.5 is where we're currently holding. So it's up slightly on the session. But when you look at it from a more historical standpoint, pretty much at the low end of the range here for the year. And I do want to point out that when you look at realized volatility versus implied levels, it's pretty interesting dynamic right now as we head into 2022. 30-day realized is running around 17.5%. 30-day implied right around 17.5%. So that's a little bit of an unusual occurrence. Typically, implied levels will hold higher than realized levels when the market's under some kind of trending lower type of vol structure, but in this case it does appear that the options players are actually discounting the 17.5 realized level and thinking that it possibly could tick lower here in the coming weeks. So looking at the money straddle in the SPX, 30 days out, 12.5%. That's trending back down towards the low end of the range for the year. So we're seeing implied levels coming in at the money levels in the SPX options. And when you look at the VIX futures, I do want to point out an interesting dynamic there as well, as we're seeing that curve steepen even more, very steep heading into 2022. Those back month futures still holding premium over cash. But the roll market between January and February has widened today once again by 20 cents. So it's out to $2.30. So a very steep curve there between the front month future and the second month future. VVIX, measure implied volatility, the VIX options 110, pushing back down towards the low end of the range for the month and actually the low end of the range for the year as well. So we are seeing vol coming in on the VIX options. And I do want to point out today some activity we're seeing in out of the money calls in January and February. The 25 strikes are pretty active, and we did see a roll go up in February to March, I believe. It was the 32 half 30 call spread traded about 10,000 times today. Now, next week, we have some data that's going to be influencing the market coming into 2022, highlighted by the unemployment report. And also, we get the FOMC minutes kicking off the new year as well. So I want to wish everybody a happy new year, and we'll see you next year on Vol 411.